buyers are gaining power in this market. How long will this last? Well, we'll find out. But today we are looking at where our inventory is at, active listings, how that is growing. And the Cromford Report has a message for sellers saying, sellers, don't overplay your hand. So we'll get into that today. Also, there are some new trends in new construction that we want to take a look at because it is affecting the supply situation in the Phoenix area. So let's jump into it. Let's look at our active listings. So we looked at this last week, and I was talking about how active listings at the first of the year have grown twice as fast as they did last year. You can see we had a little bit of a slowdown between last week and this week, not as much of a big gap of active listings being added to the market, but we are still higher than we were at last year at this time, and we're also continuing to increase. So keeping our eye on active listing, because what is happening right now is demand is actually not keeping up with our supply. And I can tell you from experience that our team is hearing from a lot of people thinking about selling their homes, most of them thinking about listing in the spring, which is right around the corner. And if this continues, and assuming that my experience is similar to other agents out there, we are probably going to see a lot of active listings hitting the market. Now, if we look at our months of supply, we're around 4.5 months of supply. What does that mean? That means if no new homes were to come on the market after today, all of the supply in the market would be absorbed by the demand. Everything would be purchased and we would have no homes for sale. That would take 4.5 months at the absorption rate that we have currently. This is obviously higher than the last 3 years. Going back to 2022, we haven't seen any months of supply at this level. So what do we think about that? Well, if we look back to, let's go to a year like 2014 and 2015 when we were in a balanced market, it's pretty interesting to see how this trend is on pace with what we saw at that time. So something to be concerned about? I don't think so, especially because when we're comparing to the last 3 years, we all know that those years were not the most normal years for a real estate market. However, this is climbing, and we know that our active listings are climbing as well. So it is reasonable to assume that our supply is growing, and the question mark becomes what is happening with the demand, which is why I'm saying buyers are gaining power right now. If we look at the CMI, we can see that the CMI is starting to go down so far this year. Again, only been 4 weeks of data here that we're looking at, so it hasn't been that big of a deal yet. But we can see this curve starting to take place. And what is different about last year is we had a lot of growth in the CMI in those first like maybe 10 weeks of the year before, like 8 to 10 weeks before we started to see this downturn here. If we go back to 2023, we had a lot of growth until we started towards like the middle of the year. So this trend is a little bit different than what we've seen in the past, largely because we're seeing more supply and less demand right now. So the Cromford Report is actually saying, sellers, don't overplay your hand right now because that buyer demand just might not be keeping up with the homes on the market. And you may have to either lower your price, give some concessions, do more repairs than you expected. You may not have the upper hand as you expected you would. So let's take a look at the table of all of the CMIs across the major cities here in the Phoenix area. Thank you to the Cromford Report for all of this excellent information. For anyone who is unfamiliar, any reading on the CMI over 110 is considered a seller's market, 90 to 110 is considered a balanced market, and 90 and below is a buyer's market. Now, the Cromford Report is saying that we have 12 cities that are showing improvement over the past month, but almost all of that improvement happened at the end of December, and the recent trends are not looking good for sellers. The average change in the CMI over the last month is 4.3%, which is a positive trend. But last week we saw 8.7%. And if I recall the previous week, it was a 10% change. So that is decreasing. Every single week, we're seeing a less positive change in the direction favorable for sellers. They also say that the CMI has definitely peaked over the last 7 days and has been heading down across almost the entire territory. And that's what I was sharing previously, where we can start to see this turn here in the CMI CMI overall and starting to head downwards. Now, they always talk about the overall change month over month, but in this case, they're actually showing a change week to week. This is obviously, you're seeing a lot more red arrows in this table, and they're saying that we now have 9 cities that are sellers markets, 3 that are balanced, and 5 that are buyers markets. At the moment, supply is growing quickly. Demand is also rising, but at a far weaker rate and without much conviction. Why is that? Because mortgage rates haven't really been too friendly to buyers lately. And then, of course, prices have remained pretty stable. So we have an affordability challenge going on and not a whole lot of incentive for buyers when rates are at 7%. They also say buyers are rapidly gaining negotiation leverage and sellers need to be careful not to overplay their hand. I find that interesting because as we get into the spring market, we are usually seeing a pretty strong seller advantage. And I think it's too soon to know if that is going to be different this year or not. I still think we're going to see a lot of momentum in the market come spring. However, if you are listed on the market currently, you may know that 50% of sales in December had some form of seller concession. So in that example alone, you know that the market is a little bit weaker for sellers. Now that was December. We're now in January. Things are going to most likely pick up a little bit, but we aren't coming from a very strong market in the first place as it relates to sellers. Now, the overall CMI is at 90.2 right now. You can see the demand index at 76.5. So this is about 24% below normal. And then our supply index is only, well, it's at 84.8. So it's only about 16% below normal. Market index overall being 90.2. Again, anything between 90 to 110 is considered balanced, and we're just right on the cusp of that balanced market tipping into a buyer's market. Now, remember, every city is a little bit different. So even though we're seeing a lot of red arrows here, we're still seeing Chandler at 159 on the CMI, meaning that they are in a seller's market. Tempe at 142, Paradise Valley at 138. So don't let the colors fool you. Know that you have to be looking at these numbers, and according to the CMI, we do have a fair number of cities in a seller's market. It's just that that trend is beginning to weaken. So if you are a seller considering putting your home on the market, just know that every city is a little bit different. If you want to get a market snapshot of what's going on in your area, check the description. I have a link where you can get that information. Now, buyers, I said you're gaining power. So that's a great thing for buyers. However, not so exciting when rates are where they are. But we did see a slight bit of movement in rates lately. Mortgage rates drop as Trump holds off on tariffs in first days in office. Mortgage rates dropped for the first time in 6 weeks, sliding back below 7% as bond traders grew less jittery about President Donald Trump's economic agenda. While affordability challenges remain, this is welcome news for potential buyers. Applications for new home purchases rose 1% through Friday compared to a week earlier, though refinancing applications fell 3%, according to Mortgage Bankers Association. So let's take a look at what the 30-year fixed rate looks like right here. We can see just, the slightest bit down, 7.07%. Very exciting. We also have the Fed meeting this week, which doesn't impact mortgage rates directly, but it is something that we want to watch. This article is talking about Treasury yields rise as investors look to first Fed meeting of the year. It goes on to talk about how traders are pricing in more than a 99% chance that interest rates will remain unchanged. So the Fed meets on Wednesday. That will have happened by the time this video comes out. So you guys already know what took place. But anything that is announced during that meeting or any commentary from Jerome Powell, all of that can affect the markets, which then affects mortgage rates. So I would just keep an eye on that type of stuff. Keep in touch with your lender if you are a home buyer, just to know how rates may change this week based on that. And if you're trying to avoid the entire game of these rates today, consider a loan assumption, buying a home with an assumable mortgage. This does exist out there. I actually have a guide below that will explain how this process works. And we also have a list of homes with assumable mortgages. So check that information out below. Now let's talk new construction. Before I get there, if any of this is helpful for you, consider subscribing. I'm here every Wednesday Wednesday. I would love for you to be part of this community going forward. Now, I mentioned that there are some trends in new construction that may change the inventory landscape here in Phoenix. And the Cromford Report is reporting that the Maricopa affidavit counts came out recently, and the new home market has deteriorated over the last 6 months. New homes have lost market share to resales, 28% down to 24% in December of 2024 versus December of 2023, for example. Now, why this is interesting is because new homes have been super competitive against resales because they can offer lower mortgage rates, a lot of incentives for buyers that are very appealing. And so buyers sometimes are willing to get into new construction, even if that means living further away than what they expected, or maybe not having the lot size that they anticipated, but because they can get in for a much lower payment based on these incentives, that has kind of edged out resales in terms of competition for a while. But according to the latest information, resales took over market share there. They're saying that it appears that builders are scaling back on their production plans. The monthly permit count for Maricopa and Pinal in December was the lowest monthly total since February of 2023 at 1,653. For comparison, December of 2023 was 2,095. A downward trend in permits has started, which may crimp our supply of new homes in the coming months. The last thing we need in this market is crimping supply, even if it is new construction. New construction has been one of those things that has kind of kept our market in this balanced zone because there has been enough supply out there for the most part for buyers. And there's always been that new construction option. So if they start to scale back, that will definitely decrease the amount of supply we have on the market. And what happens when that takes place and we have too many buyers is prices start to go up because there's more competition. So they're saying this decline could be related to a couple different things. First of all, it could be because of perceived lack of demand. The fact that our demand overall is a little bit lower. They don't want to overbuild, so maybe they're scaling back a little bit. Or it could be in reaction to potential changes in government policy. One being the fact that there could be tariffs, which could make it more expensive for builders, and two could be the crackdown on undocumented workers. Either of those could impact how builders are proceeding with new permits. They go on to talk about how new home prices are not actually determined by the cost of construction. It's actually determined by supply and demand and the market as a whole. So new homes have to obviously compete with resales. And if home builders are faced with higher costs, they may not be able to pass these costs on to the buyers. Their sales will likely fall as a result. So although I was giving some bad news for sellers out there, this is potentially good news for sellers if you don't have a lot of new construction to be competing with. So we'll see where this goes. It's going to be an interesting spring. I'm interested to see how the next month goes in terms of our supply and if demand changes at all, what may happen with mortgage rates. So stay tuned for all of that information. And hey, real estate agents, I am still looking to expand my team here in Phoenix. So send us an email if you have any interest. I will see you guys next Wednesday for my next market update.